Hey everybody, welcome to the Saturday live stream. I hope you can hear me. I'm going to assume you can hear me unless someone says I can't hear you. James Hood is cash value at $7. James Hood. Okay, great. Thanks for joining. If you're new, we do 2 raffles every live stream. I randomly choose people here, and if you get picked twice, then you win a $20 Amazon gift card. If you do win, make sure you email me to I could send it to you, the gift card. Or alternatively, I can run 2 DCFs on this live stream instead of $20. So it's up to you. Or if you want a DCF anytime during the stream, you can just donate any dollar amount. And I'll run a DCF. It takes about 5 minutes. I did a Zoom call with somebody recently, somebody from Canada. We were talking about oil a lot. Remember how I used to say that Price is Right game where a card is flipped over, say it's like a 6 of hearts, and then you have to say higher or lower. Most people would say higher, and if a 10 of clubs turned over, they have to say higher or lower, and if they win 5 times, then they get the prize. In past streams, I was saying oil is probably a jack, like the price of oil. So you would probably go lower. Like if a jack turned over, you wouldn't say higher because there's only queen, king, ace. You would say lower. But I think oil is a queen now. So there's even less. There's only king and ace right now on the upside. I mean, I don't know when oil will come down, but it has to come down. I mean, the world can't function on $100 oil in the long term. It just can't. We won't be able to survive. And supply and demand kind of fixes everything, because if something is really expensive, like when a new product comes out, like when the VCR first came out, or when the microwave first came out, like the VCR was like $1,000 because it always starts at a premium. And then more people enter the market, more suppliers, then there's a lot more VCRs out there. So you can't charge $1,000 anymore because no one's going to buy your $1,000 VCR when your competitor is selling it for $800. And then it just keeps going down and down and down and down. Before you know it, a VCR costs $99. So all the oil companies are going to try to get all their reserves into the market because this is when they can make the most margin. And the war can't last forever. Once the war is over, oil will come right back down. I can't tell you who was on the live stream, but it was actually a well-known actress in Canada was on the stream. She obviously doesn't want me to give the information out because she's a famous person. So James. Did I get? We don't. We can't increase supply in a short term, so the only solution is high oil prices to cause demand destruction. But we're still a while away. Why can't we increase supply? I don't understand. Because any mining company, whether a company mines gold, uranium, oil, they keep lots of reserves. And then they're going to unleash the reserves. Like if the price of gold doubled, all these gold miners who are storing gold, they're going to just sell all their gold as much as they can to market because now they're making the most money. It's like if you bought a stock for $20, right? And it was $500, you're probably going to sell the stock. Or if you bought a stock for 20, it's down to $1. And assuming you really like the company, you're probably going to buy the stock. Same thing with oil. And the U.S. is not reliant on oil. We produce the most oil than any other country. It wasn't like that 20, 30 years ago when we really relied on Afghanistan is a big oil supplier, and the Middle Eastern countries, Iraq, Afghanistan. Somebody donated. Does that mean you want me to do a DCF, or are you just donating? Oh, CRISPR Therapeutics. Come on. We'll do the raffle after I get this DCF done. Hey, Richard. It's live streams aren't the same unless Richard's here. Now we can start. And there's another guy. What's his name? Another guy who always comes to the stream. I should know his name. Okay, CRSP. Okay, I'm not focusing. CRSP. I started that job this week. The job I kind of run the financial part of the company. I've learned a lot, because I've never really. I understand how manufacturing companies work, but I never worked in a manufacturing company. So I'm learning a lot of kind of. If you could understand something, like you could understand how cars work. We all get it. You turn a key. The engine. I can't explain it well, and you're able to drive. We understand the concept, but can you fix a car? Can you put one together from scratch? That's much more complicated. Yeah, I was a little concerned because a lot of jobs I had, I didn't like senior management at most companies. They're always assholes. Thank God it's not the case with this company. I actually feel respect. This is like the first job I feel like I get respect. Every other job, it's always dealing with just obnoxious managers. And you can't say anything. Everything has to be their way, even if your way is better. They'll never listen to you. I think the market is getting. I mean, I could see it coming down, but we're going to hit a bottom because it's kind of like all the people who want to get into oil, they're doing it now when oil's high. You should have done it a few months ago if you know if you could. You don't want to wait till everybody knows. So right now the market's high. So I mean low. So we should be buying, not not holding cash and selling. But of course, it could go a lot lower. Um, but generally, when things come down in price, you should be more likely to buy it. And when things go up in price, you should be less likely to buy it or sell it. It's easier said than done because it's hard to sometimes sell oil when it's so hot right now. If you're on my Patreon channel, I give you a DCF. It's similar to the DCF I used. It's just a little more user friendly. You can use that to do value of stock. And if you want to buy a stock or if you want to buy oil, you'll find 100 people confirming you should buy it. Or if you want to sell oil or sell a stock, you'll find 100 people confirming you should sell it. So just if you dig around enough, you'll get confirmation bias. Khaled's the best. Khaled pays my mortgage. He's been paying my mortgage. He's funding my retirement. He's the most generous. Sheesh. I like CRISPR. I do like CRISPR a lot. Did anybody see that? You know those videos, like like those awkward videos, like where people just say something really stupid or really uncomfortable. I'm trying to think of I mean, I don't know who it was, but it was a guy. It was like I think he had his own investing firm, and he was like talking about a stock, like oh the bulls. It's really a bull run, and he's saying all these lingos and all this stuff, and how the ratios it's indicating a strong buy, and the news anchor that was kind of interviewing him, he said, what does the company do? Like, I understand the other companies you talked about, but what do they do? And he couldn't even answer. He had no idea what they did. He kind of stalled for a minute, and then he pretended he wasn't getting any sound. He's like, I'm not getting any, I can't hear anything. And then he just shut off his computer. It's funny how people like think they know so much, and then you ask them a basic question and they're like, I don't know. I don't know what they do. Like, that's an important part of investing, is at least knowing. And a lot of people can't even tell you what a company does, because like CRISPR, like the hard company to explain what they do. It's so easy to, like Tesla. Oh yeah, they make cars. And they do a lot of other things, but that's majority what they do, make cars. let me give the I'll give the lowest whack 8.8. I'm coming out with $53. You see how easy it is? It's not rocket science. All you're doing is predicting the future cash. Wait, something's wrong. Oh no, I think it's right. They didn't come out with their third quarter. Is anybody in live near Toronto? I'm thinking of visiting it. The famous actress I spoke to earlier, she made it sound really good. Toronto. I think Frontera. Yeah, because good. I want to at least know people, at least a few people, if I go, because I do have a free ticket to anywhere in Canada. After the last time I tried to get into Vancouver and they wouldn't allow me, so the Air Canada gave me a credit. See, their revenue in March 2022 is 915 million. The forecast is for it to drop to 72 million. And this is the companies provides these. I mean, it's analyst forecast, but most of it comes from the company. So if it's correct, if it drops by this much, it does make it a little more difficult that the numbers are so volatile. Hell, I'm not. I gotta fix. There's a formula that's messed up somewhere. So annoying. I'll do the raffle in a little bit. I don't know why this is. So the margins are pretty high, 40%. Let's see if we give them a 40. Oh, there, I'm at 42. Okay, so it doesn't, yeah, like I said, it makes it a little more difficult when they have negative, positive, negative, positive. But if I assume the revenue targets are accurate, and I calculated 1 billion of revenue in 2025, that's based off of the growth in these 2 years. And they convert 42% of their revenue into free cash flow, which they do if you take the average of these two, the two positives. I'm at 71. I think there's a lot more downside with this stock than upside potential. Okay. So WBA Hood. Hood and Walgreens boots. Okay. So who's here that's not, I didn't add to the raffle? Oh, Ed. Ed's the other guy who comes a lot too. Where's Ed? Paul P. Lee H. I got Lee H. Financial forecaster. And if you have a channel, let me know so I can tell people to subscribe. I assume you have a channel because that sounds like a channel name. J. Fried. Somebody said on the last live stream, they said that they told their friend about me. And then a friend says, "Why do you follow him? Does he even make money?" And then and the guy on the stream said that. And I said, so, and I think I came off defensive. I said, well, I share my portfolio. So I'm not sure what else I can do to prove I make money. And then I thought about it after. I'm like, you shouldn't listen to anybody. Like, even me. Like, I don't listen to anybody. You should make your own decisions. I don't think you should ignore people. You should listen to them, and then add that knowledge into your into like your knowledge base, and come up with a decision based on the things you learn. Whether you can learn just from everybody and not have any original ideas. A lot of people make big businesses out of that, but you have to at least be able to like identify the garbage and identify someone who may give you good information, and then come up with a decision. So yeah, that's what afterwards I was thinking I should have just said that, because you shouldn't listen to me. I mean, you shouldn't like base 100% of your decision on what I say, because I'm wrong a lot. Plus, my opinion, or like I may invest into something, and if somebody's 18 years old or 70 years old, that might not be appropriate. Okay, do I have everybody? I think I got everybody. Okay. So 16, financial forecaster. I mean, I know it's hard. Like sometimes I do research and I'm like getting confused, like which direction to go. So I may watch another channel and try to get more information, which is fine. Like there's nothing wrong with that. But if you look at like um that company SoftBank, they're the largest um investment firm in Japan. And this guy like um it's Masayoshi Son. He's like a multi-billionaire. He's really successful. But there's so many investments that he's lost billions and billions of dollars. But it doesn't matter because like he invested like in Yahoo in the early 90s. Like he just needs like if just that one or two investments he made that like 1000x'd, and there's another one he invested in really early. And when he puts like $1 billion and like a 1000x, that's like $1 trillion. But if it puts $1 billion into 100 stocks and 99 stocks go bankrupt, and that there could be one that makes up for all his losses. So that's what I see with this guy. Not so much like Warren Buffett, like he makes smart decisions, but when he makes a bad decision, like when he bought Delta Airlines, it's no big deal because he has so many winners that outweigh the losers. But if someone like us makes a bad decision, that could wipe out half our savings. We can't afford to like drop 100K on a loser. Plus maybe even 10K, depending on your situation. Minimum donation is $1 billion. It's in increments of 1 billion. 1 billion, 2 billion, 3 billion. It's just easier to. Am I missing somebody? I feel like Chris. Oh, did you? I bought call options on DocuSign last week. I don't know if you guys have followed DocuSign. It went down 30%. So I put all my money into call options, and I went bankrupt. So my lawyer sent me the bankruptcy notice. He sent me the bankruptcy docs through DocuSign, which is just so obnoxious. He could have at least emailed us something. He had to do it through DocuSign. I'm probably not good at telling jokes. Writing it down is. A lot of people like that one on my Facebook financial groups. That was a popular joke. Okay. 16. Financial forecaster. So financial forecaster, make sure you email me, or I could do two DCFs. I think Hood is next, right? Hood. Kathy Wood went on holiday to avoid the margin call. Like, she's another example. If it wasn't for Tesla, her fund, because that was like the reason her fund did so well. That was pretty much the main reason. I mean, she did have a lot of like stocks that doubled and tripled, but all those stocks, those meme type stocks, are down like 80% now. Hood 10.5. Lumen. I like Lumen. They have a good they are their revenue is going down year after year, but they have so much such a big base of revenue. Even though it's going down, it's still, they just still pay a massive dividend. Software. Yeah, I can't, on a Lumen video, I can't think of what I'm trying to. I got to pull up a comment somebody wrote on the last Lumen video. Um, Hood. Wow, 781. Sheesh. Wasn't it like 60 or 70 at the peak? Yes, it hits low 70s. Oh, the last video, I forgot to look at the ratios. I usually compare Robinhood is so reliant on crypto, because I know it's not investing in crypto, but if crypto crashes, then no one's going to use their service. It's shit. I was looking at Lumen for the future revenue. So slow. Has Hood ever turned profit? Like, do pigs fly? I mean, it's just, why would you even ask that? I'm joking. I think they were cash flow positive. No, they've never turned a profit. I don't know about on a quarterly basis. I don't think they've ever turned a profit even on a quarterly basis. Yeah, I was joking. I wasn't. chart. The thing with these with a stock like this, it's really, it's so hard to guess revenue, because revenue is the fees. They charge fees for people to trade crypto and hold it. They make money on float. If there's cash sitting in your account, they can invest that in like short term. So yeah, it went to 55. I thought the other thing said 70. Okay, so yeah, I'm at 30, which I think is appropriate for this stock. 30. See, they are cash flow positive, except in 20. But because they borrow so much money, because when people invest on that platform, or do they give loans to people? Do they? I know you can buy on margin, which is kind of like a loan. Okay, so they have a really good price to free cash flow, and a good price sales. I wish we can I know they make a lot of money, because like if you buy shit, I forgot the term, but like say like 1,000 people want to buy Apple stock on each trade, right? And they all want to pay, say, I don't know, I forgot what they said, trader. Say they all put $100 buy. I know it doesn't trade for 100, but then they go into payment for order flow. Then they go kind of like into the black market and try to pick up the stock for $99. So they pay $99, but you put your bid in for 100. So you have to pay your 100 and they keep the dollar. It's shady stuff. Bernie Madoff came up with this idea. He came up with payment for order flow. It is a little shady, because it's like saying to your friend, if your friend wants to buy something and he goes, okay, here's $500, but you actually bought it for 400. So it's kind of like your friend's trusting you that you're gonna like buy something for 500, but a good friend would say, "Oh, it was 400, not 500. I thought it was more money. So here's what you bought, and here's your 100 back." But I know they're a business, but they're not in the business to kind of like make money off of your trade. The business is for them to just make sure they set up the buyer and seller, so you can buy crypto from someone or sell crypto from someone. They kind of set that up, so they're like the intermediary. They're not supposed to make money on trades. They could charge fees, but it's a bit shady. So I know they were making a lot of money on that. See, like if you look on a statement of cash flows, it says in 2020. Oh no, it's so. For instance, in the trailing 12 months, they had a net loss on their income statement, an accounting loss of $2.6 billion. But they report operating cash flow positive 1.4 billion. Okay, they gave out 1.8 billion of stock to their employees. That's a non-cash item because they don't have to pay for their own stock. So you add back 1.8 billion. But that's common with a lot of companies. But this is what confused me a little bit. They had, like, every single year, they have a cash inflow of payables. So a change in payables means if you buy a lot of product on credit. So say I sold $1 million, my revenue is $1 million, and I paid $500,000. Well, my supplier charged me $500,000 for products. I sold it to you for $1 million. Pretend I just sell like products, like I sell jewelry or whatever. I buy 500,000 from my supplier, and then I charge you $1 million. That's how I make money. Let's just assume there's no taxes. I don't have any employees, no expenses. I do it from my home, just to make it simple. So you would expect the income statement to say 1 million minus 500,000, a profit of $500,000, which is great. But you actually never paid anything because you took it was all on credit. So you got $1 million of cash, even though you're reporting $500,000 of profit. Because I didn't pay my suppliers anything. They just gave it to me and said, you can pay in the future. They trust me. That's normal, right? And then I pay maybe in 2-3 months. I buy a lot on credit. I pay on credit. It's great way to manage cash. But it should go up and down over time, right? I have to pay them back. So maybe next year you see a big negative. So even though I have a profit of $500,000 next year, I actually have no cash flow because I paid my $500,000 to my supplier for this year and last year, all on this year's financials. But it's always positive 1.3 billion, positive 700 million, positive 3.6 billion. So it's like they never have to pay back their loans. But it's different. If it's different for finance changes in payables than for like a manufacturing company. It's not it. But I think I talked about this on the video. So that's why it's hard to look at like price to free cash flow, price to book, or price sales for companies like this. It doesn't make as much sense. If we were looking at like Tesla or a manufacturing company or a retailer, then these ratios make sense. But for like a bank or insurance company or you really have to look beneath the hood, no pun intended, of the car to kind of understand things. But yeah, but I think it's undervalued, but that doesn't mean I would buy it. I wouldn't buy, but I could see it coming back. It is kind of low, $8 for the stock. WBA. I'm not getting WBA. I do the DCF or do the raffle. Cash on balance sheet is close to market cap. That's the thing. When you look at the cash on the balance sheet, if we were looking at Ford or we were looking at Walmart, that is their cash, right? But I don't know. Like, I don't think it's their cash. I think a lot of it is due to their customers who have money in their account, because they do a lot of transferring cash. Like if I want to buy $1 million of crypto and I go to Robinhood, I give them $1 million, right? And then I go try to find what crypto I want to buy. So they have my cash. I know I could use it anytime. So they may be sitting on like all this cash from all their customers, but once they actually buy something with the cash, so I don't know how much is their cash. That's what I'm saying. It's not straightforward. Like, but I'm not implying that they're low on cash. You just don't know. That's why insurance companies and banks are very confusing and not straightforward value. That's why I don't really do those stuff. Many in the industry. Was Robinhood? Yeah, I think that Robinhood may be the first no fee broker. I think that's. I remember when they came out with no fees, and then everybody was like, then the other brokers had to change. Tellurian? Yeah, I did Tellurian. I hate doing Tellurian because I get so much negative like comments, so much hate. So annoying. Like, you're an idiot. Why do you do this? Why do you value this? You have to look at this and that, and you don't mention this. You don't talk about this. WBA. WBA. Okay, 4154. WA's. This should probably trade pretty close to where the value should be pretty close to where it's trading. These are the type of companies where DCF makes the most sense. But let's see. Well, so much for that. Well, they do pay a high dividend, so I'm coming out 82. So you may be wondering, why doesn't everybody just buy it? So 82 is kind of like, I guess, the price if they didn't pay a dividend. but every time they pay a dividend, like if they never pay a dividend, the stock would go up a lot more because they would be able to retain the cash and use it for other things. Another reason is when a company's revenue flattens, when they stop growing a lot, their stock just trades sideways forever. So this is the kind of stock that you could sit on it for so many years and not see much growth at all. Kind of like Intel, a lot of those companies, like it seems like Amazon and Facebook are getting to that point where they just kind of, and Netflix too, they're plateauing. Like their revenue isn't going up anymore, so they're just going to trade sideways. Because it is hard to, but these it's a safe stock. If you want a consistent, you're guaranteed to get a dividend. They're not going to be running out of money anytime. And yeah, they have really good price to free cash flow. Price sales is really good. See, their 5-year annual revenue growth rate is 3%. So they're so big, it's just, I have a constructive comment. Excel stocks can get you stock price automatically. What does that mean? Excel stocks can get you the stock price automatically? Is that a website, Excel stocks? Using the stock set in? No, but that, you mean a built-in function in Excel you're talking about, right? Where I get stock price automatically? But that's why you watch my channel, right? Because I have my own equals Google Finance 820. That's why you watch this, because I have my own way of valuing a stock. I mean, I could just go right here. Here's the valuation, and we can end stream right now. I mean, I could show you a million valuations. Oh, yeah. How do you get the live price? Like, I know what you're saying. Don't I have to put like an API? Like, I don't know how to. I know it's probably pretty easy, but I would, yeah, it would save me a lot of time if I learned those. Drop the current price. Is there? Yeah, let me know if there's a formula I could type in to automatically pull from Yahoo Finance. That would definitely save me time. I'm just not sure. I'll watch a YouTube video after this to try to figure it out. He wasn't talking about a valuation tool. He was just talking about a way to simply pull the info from Yahoo Finance and maybe other websites. Oh, okay. On Google Sheets. Yeah. I should set it up on Google Sheets. It would save me a lot of time. What the hell's going on? There's some things I don't like about Google Sheets. That's why I use, but I should. I should just start using it. It would be a lot easier. I don't know why I'm like I'm so set in my ways. But yeah, I should do that. I think about that a lot actually, to automate things a little more. But I just for some reason because like at this new job I'm at, I'm like I'm trying to automate everything. It drives me nuts when things are manual. Mon Monex, thank you for joining. What if Google Sheets would open his Excel and transfer everything easily? I probably have to do a lot of copying and pasting. Yeah. I've used Google Sheets at different places, but I don't know. I don't like there's some things about it. Like I can't there's some features I can't remember why, but I don't like it. But I should just use it again. I'm probably sure it's all in my head. I could probably figure it out. Still need to do the other raffle. Who likes the afternoon live stream or better than the evening live stream? I think I'm going to start doing 1 p.m. So I actually don't like doing. I'm more productive in the morning or earlier in the day. I feel like I wake up pretty early, so I think I'm just going to do the earlier. It's easier. Yeah, this is really undervalued because their revenue is declining a lot, like 22 billion down to 19 billion, and it's projected to go down. But even though their revenue is declining so much, they're still they're so profitable because they have so many clients and customers in place. They generate $3 to $3.5 billion of cash flow every year. And that's look at 9% dividend. So they always pay a really nice dividend. So you're not going to get much upside, but you'll get your dividend payment. And if you add your dividend payment to your cost basis, you'll see that you're probably making out better than most other stocks. So the dividend yield been in 10 years is 5%. That's the lowest. And it's up, it was as high as like 13%. So they always pay a really nice dividend. So could you imagine if you added 5 to 8% in cash and dividends a year, you would realize even if you were flat on the stock, you're probably making like 50% return. If you thank you, Monex. Let me know if you want me to do a DCF for you. What would you rather have? Like, you paid 100 for a stock. In year zero, So after 4 years, it's $100. But, but you bought another stock. And it grew by 5% a year, right? Say it just happened to grow exactly 5% a year. So after 4 years, you have $122. So what would you rather have? You'd rather have the stock that's 122 because 122 is higher than 100. But what if I told you you were getting a 6% dividend yield, averaging 6% a year? Then obviously you have to build that into your if you built in the dividend, your value is actually $126. So you have to. So it's just something to think about. I'm sure you guys know that. It's kind of obvious. And they have amazing ratios. Like, look how undervalued it appears. Price to free cash flow 3. So in 3 years, you get your investment back. Imagine starting a business, and say you started a business for $50,000, or whatever or maybe you start a business for $5 million, or maybe $100 million. Whatever you started it for, you got all your money back in 3 years, and then it's all profit after that. And then of course each year you get profitable after that, and that's compounded, of course. So in 3 years you get your money back. Average telecom 16 years to get your money back. It's so undervalued just because the revenue's declining. But if you own this stock for the past 10 years, you're averaging 8% in yield. So you're probably doing pretty well. Show you how to find the next, and putting like a company on each section of the dartboard and just throwing the dart. I think that's how I would probably do it, because I probably have as good of a chance of predicting that as than doing it with my own research. Well, in their case, if you did buy 10 years ago in the 40s, you'd be down a lot, even with the 8%. So this is happening to go down a lot. But if you bought it 5 years ago, depending on where you bought it, you're probably not flat. Obviously, if the stock goes down 50, 60%, even an 8% yield is not going to get. No, I'm just joking about that dartboard. But yeah, but that's something to. Maybe I'll do a video on something more broad like that. I mean, MCon. Even and another thing to consider: if I tell you the next Tesla or Amazon, there's 100% chance. I think it's about 100%, maybe 99.9% chance you because could you imagine if I told you about Amazon? I mean, I don't know the exact numbers, but say I told you Amazon is going to be the next biggest stock, and you put 10,000 into it. works. Yeah. I don't know the exact numbers. I'm just making up numbers, but yeah, I did tell you. I go, you want the next Amazon in '98? I go, it is. It's Amazon. That's the next Amazon. Um, and if I was right, like, yeah, I'm gonna do Crocs in a second. Well, okay. Say say like you will you're up to 20,000. You're like, oh, you're awesome. Then you're at 40,000. You're like, you're the best. You did find the next Amazon. It was Amazon. And then it goes from 40,000. It goes to like 1,500. The .com crash, and you're like, oh God, you're so stupid. Why did you tell me to invest $10,000? Now I only have $1,500. You might be. I'm just assuming you didn't sell anything before then, which probably you would. 75% of people would have sold most of it by now, and then you'd be like, oh God, you're so upset. You hate Amazon. And then it goes back to your 10,000 originally. After 4 years, you're like, okay, I want my money back. I don't care. I just want to deal with this. I'm stressing out about this, right? And then I don't know the exact numbers. I'm just kind of making up. Then like you would add 500,000 in 2007, and then you have, and you would have been cut in half if you did hold it in 2008. Like I don't know, but I know if you did get it in '98, you would have had a massive return. I'm like, why did you sell it? You could have had 10 million in 2019, and then it would have dropped. Come on, it would have dropped to 5 million. And then this is assuming you kept the whole 10, which nobody here would have. I wouldn't have done it. I go, you would have 13 million in 2021, and now this year you'd be like, you'd be down to 9 million. So who could have actually? Could you wait 24 years? Can you sit in a stock for 24 years and seeing now like the pain of going from 40,000 to 1,500? I mean, it almost went bankrupt, Amazon. And then hitting a million and not even selling anything. Like, who could do that? And 10 million. And then if it goes from 10 to 5, and then I bet you, if we look in 2030, that 10,000 would have been 25 million. So that's the hard part, is holding on to stock. Monex. Yeah, I mean, I do too. Like if I'm like, I had Facebook. I bought an IPO in 2012. I was down 50% after a month, but I Forex my investment. I held it for like 5-6 years, and I Forexed. I could have 8x'd if I didn't sell, but I mean, I don't know. But I could have 8x'd last year, but now I'd be back to 4x or maybe 5x now because it came down. So I mean, who knows? Jeff Schofield. Okay, let's do the raffle. And make sure you email me if you win, or if I could do 2 DCFs. Khaled, 1 dynamite. Yeah, Monex. I remember when oil was negative, and I'm like, I should just buy oil. A barrel was down to $30. I'm like, but I didn't I didn't really think about it that hard. I kind of like briefly thought about it. And now I'm like, what the hell was I thinking? Why didn't I just buy oil? It's so obvious. So I'm like, next time oil crashes like that, I'm going to buy it. It sounds so easy, but we don't do it for some reason. When a time comes, it's kind of like now, like shorting oil. I want to short oil, but like people are like, are you an idiot? But when it comes back down to like $60, $70 or $40, I'll be like, oh, thank God I shorted it. When oil's negative, you're like, I'm not going to put money to oil. It's people are saying, oh, it's never going to go up again. Oil, renewables are taking over. I would never buy oil. I actually try to short it. I try to short UCO, but the premiums are so high. It's like I have to be right. I have to be really right, or I'm like I have to pay so much in premiums. Like my order didn't go. I did put an order in for like $10,000 to short oil, but it didn't go in. Um, it's just so hard to pay those huge premiums because not only do I have to be right, I have to be right at least within a certain time frame. I can't be right in 18 months or even 9 months because the premiums are huge. It has to be within 6 months. 1 dynamite. 1 dynamite. Congratulations. What are you going to short? Like which oil stock are you going to short? You can email me and claim it, or I could do 2 DCFs on this video. Rocks. That's the thing. If oil stays high for 2-3 years, unless you can burn a lot of cash, it's kind of like those people who shorted Tesla. I mean, most of the time shorting works, but most of the time when you short it, it does go down, but it doesn't. It takes forever, and if it takes too long, you could burn through so much cash. It's like you go bankrupt. Unless you just want to put like a couple $100. You just short Kathy Wood's ARK investment fund. That's probably a good short. Yeah, I'm gonna set this up on Google Docs. Margins are getting really high. They have really high margins. It kind of, yeah, it seems really undervalued. It's kind of surprising, right? Why is it so undervalued? That's the thing. If you could somehow predict when it's going to reverse, I mean, we could all be billionaires. Even with $10,000, we could be billionaires. Because if you could time it right, you could like literally like keep 10xing your money with options. But the thing is, if you're wrong once, it's kind of like, wow, it was 181. That's interesting, right? Because initially I did have initially it was 170 my calculation using my regular DCF without interfering. But I thought that was too high, so I tried to adjust some of the numbers. But it's actually that's where it was trading at the peak. It was trading at 180. So this seems like a good stock to buy because there's a lot of stocks. I'm just using this as an example. Say every stock had this trend. There are a lot of stocks that should be $60. So when they were really driven up during COVID, it was artificial. They shouldn't have been. It shouldn't have been 180. Now it's where it belongs. But then a company like this, it appears it should be 180. And the only reason it's coming down is because of the fear in the market, because everything's coming down. But this is the type of stock that looks like it could go back up to where it was. Where if this was a different company, maybe it's never going to go back up to where it was because it never should have been there to begin with. I mean, that's really the hardest thing for us to figure out. Like those crappy companies like Peloton, I guess if I'm so smart, why didn't I just short Peloton? I guess because I'm not that smart. But yeah, because even if I couldn't have, like, the day it hit 163, I couldn't have shorted it that day. Like, I don't have a crystal ball, but say I shorted at 130, right? Because I had a feeling, wow, this is way overvalued Peloton. I can't go out like 2 years. I would have to pay so much in premiums that I wouldn't make any money, even if it did come down. So say I went out 3 months, which I think is a good amount of time. So in 3 months, it went up further. So I would have lost my entire short. I wouldn't have made any money. So then if I shorted it here 3 months, it would have worked out. But then I'd have to risk another 10 grand or whatever I want to invest, 500, whatever your price point is. So I would have done well here. But if I shorted it here, I wouldn't have done that. I would have done okay. But if I would have shorted it here, this is the big money maker if I would have got it here. But it's just like, you would have lost 10 grand here. On this one, you probably would have made like 5 grand or something. You would have made 15, but your $10,000 premium. So this is the big money maker, but I would have had to lose. I might have had to lose $20,000 or whatever you were investing in. Yeah, it's hard. It's even if you like, even if we all know oil is going to go back, come down, not crash, but we all know it's going to come back down because it's not sustainable. But will it be a year, or 6 months, 3 years, 5 years? I don't know. Because if there's the opportunity to make a lot of money, like I know in California, every car has to get smog checked every single year. It's a law. You have to get smog checked, and when you do, you pay $50-$60, and they scan your card, and that goes to the DMV saying I did my smog check. New York doesn't have a smog check, so no one's going to make money starting a business doing smog check inspections. But there's so many businesses that's what they do. They just do smog check inspections. You go there, takes them 15-20 minutes to run the tests, and then you pay $50, $60 or whatever. So if there's opportunity to make money, people are going to find ways to start cashing in on oil. So it just can't survive. I don't know. Monex, you're very. I appreciate all the donations. Do you want me to do a DCF? But you should short. You should do like for like $100 or $200. You should short just to see how it works, to understand. It's good to learn these. Yeah, Corey Feldman. That's kind of a tough call. Yeah, Monex, what ticker do you want me to do? But yeah, I made a lot of money. Not shorting. I don't really short much, but I made a lot of money on call options on a couple of trades. But I think all the money I lost out of all the call options I bought, like maybe I did it 20, 30 times. The 2 times I made money, I don't even know if I made more than I lost on those other 18 times. Okay, I'll see you later. Thanks for coming. CPG. CPG. Yeah, thanks for donations. I don't sell calls. I buy calls. And selling calls is too risky. Yeah, I wouldn't sell calls if I was you. If anybody, if you wanna long a stock, you buy calls. If you want to short a stock, you buy puts. Much less risk. I mean, you could do both. You could buy calls and buy puts on the same exact stock for the same exact. Like if you bought calls and you bought puts on DocuSign last week, and you did it like a short time frame for like 2 weeks, something, you would have made a lot of money. If it goes up a lot or down a lot, you make money. If it stays within a certain range, you just lose your premium. Is that it's called a collar? Is that the term? That's how I lost my initial Facebook stock. I was I was I was selling call options on Facebook, and I lost it. It got taken away. That was the last time I did an option trade, I think, when I lost my Facebook shares. Yeah, I know. I could roll over. Um, I before. I should learn about that. I've never done it before. My friend tells me about that he does that a lot with his Tesla. I just pretty much avoid it. I just avoid options. So this is right. This is pretty close. This one. CPG is. I get 1543. It's 1310. Their ratios are really good. I was all set to invest 50,000. I was going to buy call options on GameStop. No, on AMC. I was all set, and my wife wouldn't let me do it. And it went, and that's right before, and it went up like it tripled or something. I was so mad. I didn't talk to her for like a month. I should have just did it. I shouldn't have asked her, actually. Because if you ask anybody, I'm in this commercial. This is the commercial man. If you ask anybody and they disagree with you, for some reason you listen to them a lot, and it gets in your head. Yeah, CPG looks. Well, the good thing about oil and gas companies is you can't lose because you collect your dividends. And even if the stock goes down, you could just keep collecting your dividends as long as you don't need the cash. I mean, it is down a ton. So if you got it up here, you might have to wait a long time for it to come back. But that's the nice thing about dividend stocks is you don't have to sell. And if you get a really good company, like a Walmart or a CVS, a company that brings in tons of cash flow, there's almost no chance of them cutting their dividend or removing it. It's not like investing in like one of these crappy companies that can't afford it. Crypto? Are you talking to me about crypto? Why don't I trust crypto? Or are you talking to somebody in the chat? Because I've never said I don't trust crypto. Like 4 years ago, I would have said that I don't trust it and I don't like it. But now it's here to stay. I get it. I understand it. I wouldn't buy it though, but I get it. MOS. I mean, I wouldn't buy like there's like 17,000 cryptocurrencies. There's maybe 5 I would buy if I wanted to buy crypto, which I wouldn't. But I would buy Bitcoin if somebody said I'll give you my Bitcoin for half price. I would probably buy it because I think Bitcoin will be around and go up. But I'd rather just invest in a stock instead of crypto. I mean, I wish I invested in it when it was popular. Same thing with Tesla. I was like, no. I would never invest in that. And I regret it, you know. The options, they are so expensive. The premiums, I was like looking at it like, I was like, oil has to go down to like $50 just to make money. Like the premium is just so high. Even if oil went down to like 80 or 70, I would just like break even. It just, the thing is, there's a guy who was really bullish on GameStop, really bullish, and he spent $50,000 in options and made $50 billion. He has a YouTube channel and he posted it all the time and he shows, but he bought it before people were talking about it. The fact that we're talking about oil or we're talking about these things, you can't really buy it. You have to do this stuff before we start talking about it. Because if we start talking about it, then it's all priced in. Stock price priced in, the options it's all priced in. So you can't get a good deal. You have to start buying things that no other people buy, and then if you tell people what you're buying, they're like, "Why are you buying that? That's what are you, an idiot? Why would you even buy that? It's so stupid." So you have to buy things and people say that. That's the ideal situation because you got to buy it before people know about it. I'm still trying to figure that one out. I mean, I do that all the time, but I usually don't. It doesn't usually work though. I did that with Waiter. I bought a lot of Waiter stock. I thought I was it was a bad investment. I can barely see your screen. You can't see my screen? You should be able to. Okay, I'm at 39, but I think once revenue, actually the forecast is for the revenue to decline. Yeah, it's supposed to peak at the end of the year at 22 billion. Then it's projected to decline to 14 billion. You're going blind? Sorry to hear that. Mosaic, that's the fertilizer company, right? They do have a good PE. Their revenue growth is below average. I mean, they've run up so much with the past. It's really not it's just if you look at the price of potash, this is just all stocks. Like this is the 5-year chart for potash. If you look at all stocks like that sell fertilizer, it all looks like this. Because potash has just went up like so much the past just few months. It's just this year. It blew up potash. See that it's just it's all stocks that sell produce potash or fertilizer. Well, potash, 95% of potash is used to make fertilizer. Because you can imagine fertilizer is pretty popular because of all the farms and things like that around the world. Or people have homes as well. They use fertilizer. But you see it really skyrocketed in 2022. So it's another thing, like you don't want to wait till you don't want to wait till like this huge bull run to start buying it. I think there's a lot of downside because I mean, for decades it was at the same level, and then I can't. Okay, I can't see a 10-year chart, but for decades it was flat potash. You could see like this price. Could you imagine? You're 20 years old. You buy in the late 80s, and then you're in your 50s. You're like, I never made any money. I'm still flat. And then a year later, you like 20x your money. You get a small dividend. Okay, I'm gonna do like it's gonna be $5 for DCF because I can't like I it's just too many to do at this level. IPG. There's there's a Canadian company that produces potash. Can't remember the name. What's the name? I can't remember the name. Yeah, I have Discord and Patreon. On every video, in the comments, in the description of every video, it says the Patreon and Discord. The Patreon is like $5 a month, and every day I post an Excel file with information about companies. And I also have like a DCF. You could download your own DCF. It's similar to this one. Yeah, Mathnasium is a company I'm featured in. I used to own it. I owned it for 9.5 years. And then I sold it. I kind of miss it. But I'm excited at this new job. I could make a big difference. And if they go public, that would be great. Then I could maybe cash in. Probably save a lot of time. Where can we see your DCF? It's on my Patreon channel. It's one of the every day I post on Patreon, so you could just look through the posts. But if you're a member on Patreon, just message me on Patreon and I could just send it to you if you can't find it. That should we invest in Bitcoin mining companies? I don't know. I mean, I wouldn't do that, but you could. I'm kind of like the I run the finance part of some manufacturing company. It's right near my house, which is nice. I go home for lunch. I'm learning a lot about manufacturing, like more kind of like the day-to-day stuff, which is I just manage their books, like in QuickBooks. But like on an interview, he's like, I really want someone who can like forecast our future, forecast our income statement and cash flows for the future. Can you do that? Do you know how to do that? I was like, yeah, I think I could forecast your financials. Because I do it like every day. Yeah, I mean, it seems really undervalued. Really good price to free cash flow, really good PE. Does anybody watch Seinfeld? Remember when George did the opposite? So if you do the opposite of what everybody says to do in investing, like George did, like sometimes if you, instead of going for low PEs, find really high PEs, like 100, 1,000. Because if you notice the low PE companies, the stock sometimes doesn't ever move. It's like so stagnant. It never has much upside. When you get a really high PE, the reason it's so high is because the market is projecting growth, a lot of growth in the future. With a low PE, the market's saying the company's growth is flat or very small. Yeah, George, he's a really good actor. He's Omari, did you want a DCF or? And I was talking to somebody on a Zoom call today, and I think the only thing I only have one thing I think I do better than like most investors. There's only one thing, because I can't predict what stocks are going to go up and what are going to go down, because I would have so much money if I could do that. The only thing I think I can do better than most investors is I just don't sell out of fear or buy out of fear. Like I generally can avoid that. Not always. I do mess up a lot too, but generally I can avoid selling at the wrong time or buying at the wrong time. But other than that, I mean, I don't really have anything special I can do. Just because I can explain it and understand it doesn't mean it's I know all the best stocks to invest in. But okay, yeah, this was a long one. Okay, one more. WLK. Because if you invest, the best time to invest in Amazon and Tesla when they had a PE of over 1,000. Now that Amazon's PE is coming down to normal levels, you don't make any money on it. There's no upside potential. But if you invest in stocks with a PE above 100, 90, most 90, probably 95% of the time, you're going to lose your entire investment. Only a small percent of the time, those companies will do well. You have to understand that too. If you invest in a low PE company, you're probably not going to lose money and not going to make money. You'll probably move with the market, or like there's much less volatility. You just did. Oh. Okay. So if I understand you correctly, then I should buy all call options. Exactly. But you have to understand that if you want to make if you want to play the lotto and you want to 10, 20, 50, 1,000 extra money, you can't invest in low PE companies. You'll never do that. You have to invest in really, really high PE companies and understand that you're probably going to lose all your money in almost all the situations, and there may be a few instances where you make a ton of money. But if you invest in really, really high PE companies, you'll probably run out of money before you ever make a profit. Unfortunately, unless you happen to pick the correct winning number on a lottery ticket the first time you play. So if you could find a company that you really like, has a great business model, that's not really making much money, that's what we want. That's what we all want. We want to find companies that aren't making much money now that we think are going to be huge. That's not how I invest. I'm just saying, if that's, I play it safe. I'm just trying to average 10% a year, 15% maybe. Yeah, crypto, well, I trust it more now, but it's like I mean, if you really think about it, every business is a pyramid scheme. If you really think about it, in order for you to pay your employees, in order to pay your suppliers, you have to keep getting money from other people and just keep cycling through money. So it's a type of pyramid scheme, every single company. It's just not as obvious. Wow, this is real close, this one. It's almost exactly what they're trading at. But a true pyramid scheme is illegal. You can't. A true pyramid scheme can't last forever. Eventually, it crashes. Where a company can last forever, because once you get too big with a pyramid scheme, there's not enough money to keep replenishing the old money. Bernie Madoff did it the best though, but it's gonna fall apart at some point. We have really good price, 8 price to free cash flow, a 7 PE. Specialty chemicals. It looks good. Yeah, this looks like a good stock. I mean, I'm coming out with where it's trading at, so it's possible there's not much upside potential. But there's a lot of stocks. My calculated stock price is double what it's trading at. Like Intel, like stocks like that just don't, or AT&T. Shorting treasury bonds? I never heard of that before. I don't know. I've never heard that. I mean, I guess if you make money. Hey, Doc, what's up? Another regular, Doc. Okay, so I guess we'll call it a day. Yeah, I'm not doing live streams as much during the week because I work now. And it was good to do live streams during market hours. But okay, yeah, thanks for donating. Everybody who donated, thanks for joining. My channel is getting back, improving. Like it was struggling for like a month or two when the market was down, but it's improving. Views are getting a little better. Okay, I'll see you guys next Saturday. Thanks for coming.